A very good afternoon to you all. My name is Mr. Simbi, and welcome to today's accounting lesson. This lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center. It is very important that we continue meeting in these classes, and I'm excited to have you today in my class. And today is the last class for this term, as we're not going to meet next week, Friday. But it is very exciting for me as I'm starting a very new topic, which I had promised in the previous week that I would start something new, which is the cash flow statement. So if you know a friend that is confused with this cash flow statement, please tell them to tune in and tell them that Mr. Simbi is now in class and is going to begin with the topic. You need a question paper that was sent to your teacher. So your teacher must have received a worksheet that I'm going to be treating in today's class. If you don't have that worksheet, just ask the teacher. Maybe they can send you the electronic version on your cell phone. Once you have that electronic version, it becomes easy. You can follow through what I'll be explaining. It becomes easy for you to see the explanations that I'll be giving in today's class. Once again, welcome to today's class. Here are my objectives for today's class. It is just a single objective. That is, I'm going to explain the cash flow statement together with its notes. Now, what information do I need to prepare a cash flow statement? You will see that we have already done what is known as the statement of comprehensive income, your income statement. From the income statement, we're going to need certain information. We're going to need our depreciation. You will see where I'm going to use this depreciation. You're going to need interest expense. You're going to need net profit before tax, as well as your income tax. This is information that we are going to need. You will also need what we call the statement of financial position. That is our balance sheet over here. And from this balance sheet, you will need your assets, that is your current assets. You need your current liabilities, and you need your SARS income tax shareholders for dividends, and you also need your dividends. All right. And then your fixed assets, your fixed deposit, ordinary share capital, as well as your non-current liabilities. I'll show you how we're going to use all this information. So it simply means you need the two statements that we have done so far, your statement of comprehensive income, and you will also need your statement of financial position. And you will need these notes to financial statements. That is your fixed asset note, that is your note number 3, your share capital note, that is note number 7, your retained income note, that is your note number 8. And remember, your dividends also come into your retained income note. Now, I'm going to break down the cash flow statement into three components. So if you are to visualize the cash flow statement, you must think of these three elements that I'm going to give to you now. So the cash flow statement is broken down into three specific elements, namely your operating activities. In your operating activities, this is where you have the profit motive. This represents the core function of the business, all right, which is to make profit. So this is the area where we trade and make profit. And this is the main reason why we established this business. So we're going to be looking at our operating activities. So the first part is going to be your O, that is operating activities. And then the second aspect is your I now, which is your investing activities. So far, I have my O, I have my I, all right? And in my investing activities, this is the purchasing of the necessary assets to achieve the objective of generating profit, okay? And now here we're looking at our investing activities. We're going to be looking at our fixed assets and our investments as well. So these are our investing activities. And then we're also going to look at our financing activities. That is the last part. That is the F. financing activities. This is where we see how our capital is employed. That is finding the money, that is the sources to finance the things necessary to achieve the objectives of the company. And you're going to see that I'm going to break down capital into two aspects. That is our own capital. That is capital we raise through the issuing of shares. You remember note number 7, exactly. And then we also have what we call borrowed capital. Borrowed capital is capital that we get from other institutions, such as banks. So we are talking about loans in this case. So that's financing activities. So my cash flow can be broken into 3 main aspects. That is your O, operating activities, I, investing activities, and then the F, which is your financing activities. So I can say on my cash flow, I have my O, I, and the F. OIF, O, I, F, operating in activities, investing activities, and then lastly, it is your financing activities. Here is a simple format of the cash flow statement. And it is very important, my good friends, that you know your format. When you have been following these classes, I've been saying from the onset, know the format of your statement of comprehensive income. You cannot be recording foreign items into your statement of comprehensive income. Know your statement of financial position. Know your balance sheet. You cannot record foreign items in there as well. And in here, you need to know your format as well. That is the format of the cash flow statement. And remember, I've already introduced you to the 3 main aspects of the cash flow statement, which is your O, your I, and your F. Operating activities, investing activities. Then lastly, it is your financing activities. So, under my operating activities, you see that I have 4 things here. 4 aspects. The first one is cash generated from operations. And that one, I get it when I have opened my note to the cash flow. All right. Some call it note number 1, the note to the cash flow. That is the reconciliation of net profit before tax to cash generated from operations. I'm going to do that note together with you. So that is where I get my cash generated from operations. And you can see this one. It is a cash inflow. All right. So this is where we take it straight from the statement of comprehensive income. And then we create this note. And then we have this cash generated from operations. And it is indeed a cash inflow. And then the other three, you will see that they have similar names. And these names are made similar by this part. Paid, paid, paid. And you can see that the moment I hear the word paid, it simply means cash is going out. The purpose of the cash flow statement is to indicate to the company when is cash coming in, inflow of cash, and when is cash going out, outflow of cash. Remember, we're talking about cash flow, the movement of cash. Cash flowing into the company and cash flowing out of the company. So you can see here, I've already indicated this one is a cash inflow. But the moment I see the word paid, that means cash is flowing out. That's a cash outflow in that particular case. So I have my interest, which becomes number 2, dividends number 3, and income tax number 4. And you can see that all these 3 are being paid. So it's a cash outflow. And you can see now with the brackets that I have put in here. So these 3, they are all cash outflows. Cash is flowing out. When we pay for interest, cash is going out. When we pay for dividends, cash is going out of the company. When we pay for tax, cash is going out of the company. We have paid. So it's a cash outflow. That is the first part. That is our operating activities. And then the next part is your investing activities. And you will see that under investing activities, we have 2 main things that we record. here. Number one is your fixed assets. Number two, it is your investments, which is your fixed deposits. You will see that. So we have two aspects, but these two aspects are like a coin, which has two sides. You're following it now. So your fixed assets, we have two sides to it. We purchase fixed assets, and these fixed assets, we can also sell them. Okay, so those are two sides of these fixed assets. So I'll come here on the fixed assets. The first one is fixed assets purchased. Already you know, if we are purchasing, we need to look at the direction the money is going. Is money coming in or is money going out of the company? If we're purchased, therefore money is going out, it is an outflow. The next one, it is the proceeds from sale. So we are selling our fixed assets. You remember asset disposal now. We are disposing an asset for a number of reasons. And then once we dispose an asset, cash is coming into the company. So we then call this inflow in that case. Hence, you don't see no brackets. And then the last one, it's on the investments, fixed deposits. So in fixed deposits, we have two sides. Number one, when we invest into a fixed deposit, that is a cash outflow because we are taking money out of our bank account and investing it into an investment account. That is a cash outflow. But when that investment, when that fixed deposit has matured, that cash comes back into our bank account. So it becomes cash inflow in that case. And here I am explaining a decrease. When your fixed deposit was 100,000, but now your fixed deposit is 40,000. That means that portion there has matured and it came into our bank account. So it becomes an inflow in that case. And the opposite therefore becomes true, where your fixed deposit is 20,000, but now it is 80,000. That means we have invested in a fixed deposit. That means we have taken money, cash, onto the investment. It becomes a cash outflow in that regard. Then I can come now to the financing activities. In my financing activities, it is similar again to my investing activities, because in my financing activities, I also have two parts. How many parts? Two parts. Okay, so I have my own finance, which is through shares, own finance, and I also have borrowed finance, which is through loans. So, with my own finance, I have two sides. I can issue shares. Remember note number 7. When I issue shares to the public, that means I am selling shares. What do I receive? I receive cash in that regard. So I call it proceeds from issue of shares. This becomes a cash inflow. I've sold shares, so I get cash in return. Then the next side to it is when we buy back shares. You remember when we used to do that triangle? I'm going to do the triangle again today with you. So that the repurchase of shares, when we have a disgruntled shareholder or a shareholder who does not wish to be part of the company no more. So we buy back those shares. When we buy back those shares, we are giving that shareholder cash. So it becomes a cash outflow. So here that becomes a cash outflow. And then we come to loans. So loans also have two parts to it. Number one, when we receive a loan, that means cash is coming in. Yeah. When the bank gives us a loan, that loan comes to our bank account. It's cash inflow. There's other side to it. Remember, it's one coin with two sides. The other side of the loan is when we pay back that loan. When we pay back that loan, remember, we are paying cash outflow. So in this case, we have a decrease in loan. When the loan was 50,000, but now the loan is 20, it means you have paid back the loan. You paid back 30. That becomes a cash outflow. Hence, you see brackets. We're good. All right. And then you have the last part of the cash flow, which is the net change in cash and cash equivalents. We're going to do that part together. Most examiners may test the cash flow statement in full. That's one option. Or they can break it down into pieces. That's another option as well. Or you can see that certain parts of it are tested. Or you can be given and then you fill in the missing information. That's another version of the cash flow statement. Or you can be given it and then you analyze it. We're going to do that together in the lessons that are to follow. Okay, can I move on from here? Beautiful. Here we go. Here are the components of the cash flow statement. Remember now, I've spoken to you, I've introduced you. How many components now? 3. There is your operating. So here we have 80,000 and you're investing with 100,000. And remember, that's a cash outflow. You can see the bracket there. That's a cash outflow. And then you have your financing. That's a 60,000. That's inflow because no brackets. So you're going to get those 3 figures. Let's see if we have our adding machine. So I'll say my 80,000 there, and then I'll say minus 100,000. That's a million, Mr. Simbi. Now it's 100,000. And then I'll say that is equal to, and then I'll say plus 60,000, plus 60,000 there. That's 60. And then you get your 40,000. That is how we get this 40,000 there. So we're coming all the way from there, coming down here, respecting the signs, following the signs. And then you have your cash and cash equivalents at the beginning of the year. This is your balance in the bank account. It can be positive, it can be negative. So at the beginning of the year, we had 10,000. So our net change is 40. And at the beginning of the year, we had 10. So which then leads us to 50,000. That is a positive total at the end of this year. This is what we seek to do. This is a summary now, a shortened version of the cash flow statement. But what I did previously is the longer version. That is the cash flow statement. Okay, so in summarizing it, when we look at your cash generated from operations, I think I explained this earlier on, that your cash generated from operations, that is your inflow here, but your other amounts are paid. So once they are paid, it is cash outflow. Now, I want us to look at the format of the note that I spoke about. This is the format of the note that we're going to do first with one of the longest names, okay? This is for us to calculate the cash generated from operations. We seek to calculate this figure there. That is what we want to calculate. But for us to calculate that figure, we will start from the top. And you can see here, we have our net profit before tax. So there are several ways of arriving at that. If you've been following my lessons, you will see that we've had calculations where we can calculate net profit before tax, calculate income tax, calculate net profit after tax. Several ways of how we can do that one. And then here we're now saying we will add back what we call non-cash expense. So the first one is depreciation. So we add back depreciation, which is my 500,000 there. And then we add back interest expense, because this interest expense will be shown in the face of the cash flow. So here I add it back here, then I get to subtract it in the cash flow statement. And then once I have done this, it gives me this amount, which is the operating profit before changes in working capital. And then I come to my changes in working capital, whereby in my changes in working capital, I have these 3 things: my inventories, my receivables, and in my payables. Your working capital, I think you can hear it from the word itself. It is how our capital is working for us. And there are 3 things that we're going to be looking at. First one, it's inventory. All right. So with inventory, we are going to look for either an increase or a decrease, whereby if your inventory is increasing, if your stock is increasing, we'll consider it to be a cash outflow. For you to understand this part, let me start with the other part. When your stock is decreasing, so in simple words, if we had 3 boxes of stock and now we are left with 1 box, it means we have sold the other 2. Now, you have to know that inventory and cash move in opposite direction. When your stock is going out home, with the customers. Cash is coming into the business. So when your stock is decreasing, that means our cash is increasing, cash inflow. So a decrease is an inflow, yet an increase is an outflow. And we're going to do these ones practically so. Receivables, we're talking about our debtors now. When our debtors increase, it means debtors are not paying. When debtors are increasing, it means debtors are not paying. And once your debtors are increasing, that's a cash outflow. But again, to understand this, let me give you a picture. Let's say we have 3 debtors here that owe us. Here are 3 debtors that owe us. Okay? But at the end of the period, we only have 1 debtor. What happened to the other 2? They have paid us. So a decrease in our debtors. A decrease in our debtors. But remember, we're talking money now. A decrease in our debtors. That means we don't have much debtors anymore. What has happened to them? They have paid us. So when debtors decrease, that means they are paying us the money that they owe us. So a decrease becomes cash inflow. Okay? And then you have trade payables, creditors, organizations, companies, institutions that we owe as a business. We owe them money. Payables. Now, when your payables increase, we consider that to be cash inflow. But to understand that, let me explain the decrease in payables. So let me paint again a picture. We have 4 companies that we owe. 4 companies that we owe. If we owe 4 companies, and then at the end of the period, we only owe 1 company. What does that mean? That means we have paid the other 3. When we have paid, there's the keyword. We have paid. Once we pay, it's a cash outflow. So when your creditors decrease, it's a cash outflow. Money is going out. So a decrease becomes cash outflow. And then we get that figure up here, and then we get the difference between those 2 figures, and then we come down here. I know you're saying, Mrs. Imbi, we don't want to work with cartoons. Give us figures. I was about to say, let's go into figures. So without further ado, let's look at activity 1. Activity 1 was provided to you by your educator. If your teacher is not given to you, please constantly remind them every Friday morning. Please, ma'am or sir, kindly do so. Remind them kindly. I know they're very busy. Just remind them, ma'am or sir, remember to send us the online live class worksheet. And then you come at 2 p.m. I'll be here waiting for you so we can have class together. Let's start with activity 1. Activity 1. Activity 1 is adapted from the Free State Prelim for the year 2023. And my focus is on question number 2. You ready? Let's do it together. Okay. The information reads, cash flow statement and financial indicators. Free State suppliers. So I'm not going to do the entire question. I'm just going to do a certain part. And my focus, as I've said, is on the note called the reconciliation between profit before tax and cash generated from operations. Yeah, it is a very long name indeed, but you have to know what it is called so that if it comes in the test, if it comes in an exam, you are ready and you answer it nicely so. Can I go to the next information? Let's do so. Here is the information extracted from the statement of comprehensive income. Remember, I told you that we're going to have information from the statement of comprehensive income. We're going to have information from the statement of financial position. And we use this information to create our cash flow statement. You remember that? So the first piece is coming from our statement of comprehensive income. And then here's an extract from the statement of financial position. And here are some notes. Remember, these are still notes to the statement of financial position. And then let's begin. So the first part is to get what we call net profit before tax. All right. So here we are given my net profit before tax here. This one was easy because the amount is given in already. So what do? I simply come here and I say my net profit before tax, that's my 2.4 million. So I'm coming here, it's going to be 2.4 million like that. Net profit before tax. Then the next thing is, I've already indicated to you, I'm going to add back my depreciation. I gave you the reason, you remember, because it is a non-cash item. So I'm adding it back. It is a non-cash item. So I'm going to come and say, here is my depreciation, 185,700. So I'm going to come and say plus 185,700. Like that. I add back my depreciation. And then after that, I'm going to come and I'm going to add as well my interest expense. So I'm coming here. I have interest on loan, which is 175,000. So I'm going to come here and say interest expense, 175,000. I am adding. That's the key part. I'm adding depreciation and interest expense. Why am I adding interest expense? Because I'm going to show it on the face of the cash flow statement. So in the note, I add it back. Then in the cash flow statement, I subtract it now on the face of the cash flow statement under my O. Remember? O, I, and then the F. You remember that? Okay, so I'm going to add it in the note, and then I'm going to subtract it properly in the cash flow statement. And then here now I can get this figure here. So I'm going to take this 3 and I'm going to get that figure there at the bottom. Here's my calculator. So I'm going to say my 2.4 million plus 185,700. Like that. Plus 175,000. Plus 175,000. Like that. And that gives me 2,760,700. So I get my 2,760,700. Just like that. Okay, so it's 2,760,700. That becomes my operating profit before changes in working capital. Let's continue. The note is not yet complete. Already I know now. Where am I going? The changes in working capital. Let's go now to the changes in working capital. All right. So I have my operating. This is what I calculated. Remember, this is what I calculated just a second ago. So I'm coming up to the changes in working capital. And on my changes in working capital, I'm looking at 3 things. What did I say earlier on? Inventory, trade and other receivables, trade and other payables. Let's start with inventory. So on my inventory, I am going to first, let me teach you the longer way. Then in the next activity, I show you the quicker way. Is that fair? Okay, so let's do it the longer way first now. And then in my next activity, activity number 2, which I've set already for you, I'm going to do the quicker, the shorter way, the faster way, the smarter way. Okay, so let's do the longer way. So I look at my 2022, my inventory was 1,281,500. Then I look in 2023, which is the current year. That is where we are now. Okay, and my current year is 1,350,000. So I can see here, my inventory has gone up. And once my inventory is going up, I know an increase in inventory is a cash outflow. So I'm going to come here, change in inventory. In other exam papers, the examiner would give a dash here and they want you to tell them, is it an increase or a decrease? So if I'm tested in that way, I'll come and then I'll say, here it is an increase in inventory. And I know once it is an increase in inventory, I have my brackets here already waiting. Okay, I have not even calculated the figure, but I know once it is an increase, it is a cash outflow. An increase is a cash outflow together. So I'm going to come here and say my inventory here is 1,281,500. Then I'm going to take out my 1,350,000. There I close my bracket. And then calculator, come here, my friend, 1,281,500. Then I subtract 1,350,000. Like that. Then I get 68,500. 68,500. Remember, we had the bracket in already because we know that once inventory is increasing, it is a cash outflow. It means we are buying more stock, and we're buying more stock. Stock is coming in, cash is going out. I told you about the relationship between stock and money. When stock is coming in, stock is increasing. Stock is coming in, that means money is going out. They never move in the same direction. They always move in opposite direction. Stock and cash. Can the teacher go on then? Let's do that then. Let's do that. Okay, so I know I'm done with my inventory. And then my next aspect is going to be what? Receivables. Let's see. So I'm coming to my trade and other receivables. Now, when you are doing your receivables, you have to be very careful in this case. You have to look at what the examiner has given you. Because at times you can be given this amount, which is an extract of the current assets. Under your current assets, remember, you have your inventory, receivables, cash and cash equivalents. So this is what will appear under your current assets. But at times it can be broken down further now, as you see down here. Now, you must not use this figure here. No, you must not look at an increase or a decrease from this total to that total. Why? Because there are certain aspects that can be part of receivables that we will not consider in the increase or the decrease, because they must be recorded separately on the face of the cash flow. You didn't get me there. Okay, I'll say it again. You must avoid looking at this figure and this figure, because these figures include certain amounts that must be shown separately on the face of the cash flow statement, such as what, Mr. Timby? Such as your SARS income tax. So if you use that 1,530,000 here, that would be very wrong, because it includes SARS income tax, which must be shown separately on the face of the cash flow statement. So what do? You take these two only. You take your debtors and you take your accrued income. So here you come, you take your debtors, you also take your accrued income there. Okay, so let's see if we can do that. So I'm going to come and I'm going to say, calculators then. Calculators, let's come here. Change in receivables. So in 2022, so I'm going to come here, I'm going to say, in 2022, I'm going to add those two and I'm bringing it here. In 2022, I have 1,420,000. 1,420,000. No, 120. Yes, 1,420,000. Then I'm going to add 35,000 like that. Okay, that is going to give me 1,455,000. So here I get my 1,455,000. I have ignored the SARS income tax. Then I'm going to add these two again, which is my 1,554,000. And I'm going to add 26,000. That is going to give me 1,580,000. 1,580,000. Okay, so now I'm certain now. I'm certain. Now, I will now look, is it an increase or a decrease? If I look from 2022 going to 2023, I had 1,455,000 and my debtors have increased to 1,580,000. So that tells me that I have a cash outflow. I have my brackets in already. An increase in debtors is a cash outflow. So I'll come here and I say in this lesson, I'm going to show you the longer version. But in the next activity, number 2, I'm going to show you the simpler version. Okay, so I'm going to come here and I'm going to say now. I'm going to say my 1,455,000. Then I'm going to subtract my 1,580,000. And when I do that, let's see what my calculator is going to say. The difference with 1,455,000. The difference is going to be 125,000. So I'm coming here and I'm going to get my 125,000 like that. That's how I would do it. Okay. Should move on to the next aspect then. Here's the last one then. So with my payables, I'll do the same. I'll also open my eyes. I'm not just going to take these figures here because they include again SARS income tax. But under your payables, it is not only the SARS income tax that you look out for. You look out for SARS income tax as well as shareholders for dividends. I don't take that one. So that means I'm only going to focus on my trade creditors. So I can see my creditors have decreased. It was 1,586,000. Now it's 1,347,000. What does that mean? If the people I owe, the companies that I owe are decreasing, the amounts that I owe to companies are decreasing, it means I paid them. So paid cash outflow. So I'm going to come here and already I have my brackets put in already. And let's simply say it is going to be my 1,347,000 minus my 1,586,000. And here's my adding machine. I'm going to say 1,347,000 minus 1,586,000. That will give me 239,000. 239,000. As simple as that. And once you're done with that one, this is your entire note. That is your cash generated from operations. Why were we doing this note? We were doing this note because we wanted to enter a particular amount onto the cash flow. This is the cash flow statement now. Here is our cash flow statement. And I told you about the three parts of the cash flow. Your O, your I, and the F. So we will now say the O, cash generated from operations. The first amount is cash generated from operations, okay? And a cash effects from operating activities rather. So we are looking for the cash generated from operations. And the amount is 2,328,200. So I'm coming here. That's my 2,328,200. And that is a cash inflow. You can see it's a positive amount here. That's cash inflow. Are we good? All right. So let's quickly go on to the next aspect then. Okay, let's do that. So the next aspect is going to be a new activity now. The one where I said I'm going to show you the smarter way, the quicker way, the faster way. I'm going to show it here now. Are you ready? Now, the next activity is definitely from Gauteng. Okay, so it's our own Gauteng prelim paper for the year 2022. And my focus is question number 1. Okay, are you ready? And if you're ready, let's do it together. Here it is. Severance Limited. Severance Limited. The question reads, the information below was extracted from the record of Severance Limited. The financial year ends on 28 February 2022. And then we have the extract from the statement of comprehensive income. And, oh, we're doing the famous note, the one with a long name. Remember, we have done one just a few seconds ago. So, are you ready? Do you want me to give you time to try it out? Or you're saying, let's do it together? I don't mind. Let's do it together then. All right. Net profit before tax. Net profit before tax. So here we're given income tax. And income tax is 28%. You have to understand that when you prepare your statement of comprehensive income, you get what we call net profit before tax, and that is 100%. But you also get what we call income tax, and in this case, your income tax is 28%. Then you get your net profit after tax. So that is to say 100 minus 28, 100 minus 28, that gives you 72%. So net profit after tax is 72%. So when I come here, what I want is what? Net profit before tax. I want net profit before tax. So I'll say here, what do I want? I'll open my bracket. What do I want? I want 100. That is what I want. Net profit before tax. What do I have? I have income tax, 2,072,000. That is what I have. So I'm going to come and say 100 over 28 multiply by 2,072,000. Then I close bracket. And then come to me, my adding machine. It is 100 over 28. I multiply that by 2,072,000. That is going to give me 7.4 million. 7.4 million. Net profit before tax. Net profit before tax. 7.4 million. After that, I'm going to come and I'm going to now say, let's add. What do we do here? We add depreciation. We add depreciation. We're adding. You can see there's a plus sign there. We're adding depreciation. I told you the reason. It is a non-cash item. Yes, it is a non-cash item, so we add it back. So I come here, I say my depreciation. How much is my depreciation? There it is, 320,000. So I'm coming here to say plus 320,000. We good? Okay, let's go on to the next one. The next one is I'm going to add again. What? Interest expense. Let's add my interest expense, which is 219,700. 219,700. Someone just asked me, Mr. Simbi, why are we adding the interest expense? Okay, I can see you just joined us. We add our interest expense because we're going to subtract it in the face of the cash flow. So we add interest expense back here because when we go to the cash flow statement, we're going to subtract it when we do our cash effects from operating activities. I'm going to show you when we get there. What do we do here now? Let's close this thing up. Okay, make sure your calculators are ready and then we punch together. Let's go. So I'm going to say my 7.4 million, you see it over there, plus 320. Let's go. 320,000. Yeah, that's 320 now. Plus 219,700. 219,700. That's going to give me 7,939,700. Okay, let's see if we can put that. 7,939,700. A very long figure indeed. Okay, what is that? Operating profit before changes in working capital. So what comes next now? The changes in working capital. Let's do that. So we come to the changes in working capital. Okay, all right, we come to the changes in working capital. All right, so for us to get the changes in working capital, I'm going to let you look at the information and then we're going to take a quick short break and then I'm going to see you in exactly 2 minutes and then we continue.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back, guys. Before the short ad break, remember we said we are now going to do the changes in working capital. And remember, we've already calculated the operating profit before the changes in working capital, which was our 7,939,700. We did do this one together. So we're now coming to the changes in working capital. And on our changes in working capital, we're looking at three aspects: our inventories, our receivables, and our payables. And we're going to look at them one by one. But I then said I wanted to show you a quicker way of calculating these changes. So one of the fastest way is to say, when you are dealing with assets, for example, your inventories and your receivables are assets, you simply say previous minus current, then you trust your calculator. Whatever your calculator gives you, you put it in as it is given on the calculator. What do you say? Previous minus your current, and then you take whatever your calculator would have given you. So let's see if that is going to work in this case. In our inventories, so 2021 becomes the previous year, 2022 becomes the current year. Can we go? So the previous year we had 110,250. Previous minus the current. The current one is 561,880,000. Then we close the bracket. So remember, you were saying it is your previous 110,250 minus the current 561,880. And then our calculator is giving us a negative 451,630. That's very key. That figure is negative. So when I come here, I am going to copy that. It was a negative 451,630. It's a negative. It was in bracket. So it's a negative 451,630. I put it in there in bracket. Are we together? Okay? Because when your inventory increases, it's a cash outflow. Remember what I said. When your inventory is increasing, it simply means your stock is coming in and your cash is going out. So it's a cash outflow in that case. I'll move on to the next aspect. And the next aspect now, I'm now looking at my receivables. Remember, I've done my inventory already, so I'm looking at my receivables. Okay, so first, remember what I said. There are certain aspects of receivables that you must not take, as well as payables. So in your receivables in 2021, I'm going to take my debtors. I'm going to take my 342, and then I'm going to come, I see my accrued income, I take my 81. All right, so I take my 342, I take my 81 as well. All right, so I come to the other year, so all the other amounts, I'm not going to consider them. And then I also take my 1,249,700. I also take my 48,000 over there. So I'm going to add these ones and see how much I get. I add these ones and see how much I get. So I'm now going to say 342 plus 81. 342,000 plus 81,000. That is going to give me 423,000. So I'm coming here. That is 423,000 over there. And then I'm going to come here and say 1,279,400. 1,279,400 plus 48,000. Plus 48,000. That is going to give me 1,327,400. 1,327,400. Like that. So remember now, I introduced you to another shorter method, which was saying when it's your assets, you say previous. So I'm going to come here on my receivables. What is my previous? My previous is 423,000 minus my current year, which is the 2022, which is 1,327,400. Then I close my bracket. Once I do that, I'm coming here now, and I'm now going to say it is my 423,000, and I'm going to say minus 1,327,400, 1,327,400, and that is going to give me 904,400. But the key part is, you can see it's a negative 904,400. So I'm going to come here, and it's a negative 904,400 in brackets like that. Then I keep it in brackets. I record it in brackets as I have done over there. And then I'm going to go on now to the last part, which is my change in payables. My change in payables. All right. And in my change in payables, let's just do it here at the same time already. So in my change in payables, I'm going to look now at my creditors. Okay. So on my creditors, I'm going to add this one is number 1, and that is my number 1 here also. And then I'm going to add my accrued expense, which is number 2 here, number 2 over there also. Then I'm going to add my income received in advance, which is number 3 here, which is number 3 there. So in other words, I'm going to add my 1, 2, 3 for 2021 and my 1, 2, 3 for 2022. Let's see if that can come out. Let's start in 2021. I'm going to say 338,000, which is my trade creditors, 338,000. And then I'm going to add my 8,700 plus 8.7. Then I'm going to add my 6,200 plus my 6.2. That is going to give me 352,900. So in 2021, it gives me 352,900, 352.9. And then let's see what happens in 2022 now, because this was 2021. Let's see what happens in 2022. In 2022, we're going to add again 1, 2, and 3. So I'm coming here and I'm going to say my 770,000 plus my 9,000 plus my 9,000 plus my 5,400, like that. And that is going to give me 784,400. So I come here at 784,400. But these are liabilities now, because I'm talking about changes in payables. These are liabilities. And in my liabilities, I'm going to say current. This is my current. My current is 784,400 minus my previous, which is 352,900. I close the bracket. So I'm going to come here and I'm going to say 784,400 minus 352,900. And then I get my 431,500. Here that becomes 431,500. I trust the calculator, so I don't even struggle with the sign. On my calculator, it was positive, so I'm going to keep it as positive. And then I'm going to come now to the last part of it. So where I simply add that, I get that amount here. I add these amounts. Remember, I got that one. Then I get the difference between these two amounts, which gives me that amount there at the end. That becomes my cash generated from operations, which I know I'm going to now show in my cash flow statement on my cash effects from operating activities, which is going to be my 7,015,000, 7,015,170, 7,015,170. At the same time, I know that in my cash flow statement, I'm going to have 3 aspects which are paid. So I'm going to have my interest paid bracket, taxation paid in bracket, dividends paid in bracket. That is straight on. Okay, so my interest paid, it's simple because I have my interest over here. There it is. So I'll simply bring that same figure. That is what I'm going to use here. Then I'm going to come here and it's going to become 219,700. The same amount which I had in the note. Remember, I told you I'm adding it back so I can subtract it properly down here now. So now I've shown you where I added it back, and now I'm subtracting it in the right place. In the face of the cash flow, I subtract it. We good? Okay, cool. So let's go on to the next aspect, which is the rest of the note. So I've done my interest paid. All right. So I come here. Remember, I did it already with you. That is your 219,700. Once I hear the word paid, I know I must have my brackets. Let's go to the next one. The next one is going to be my dividends paid. My dividends paid, but we're going to take a quick 2-minute break, and then we meet in 2 minutes. Then we do our dividends paid. See you in 2 minutes.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
And welcome back. Remember, we were busy now as we want to record the amount for dividends paid. The amount for dividends paid. Now, if you want to calculate the amount for dividends paid, there is a very short way, a very quick way in which we can do this. But at the same time, I want to take the opportunity to do note number 7 with you, because here we have information which we can use to do note number 7. So let's do note number 7, and then I'll show you how we can do this dividends in a much simpler way. It says, on 1 May, the directors issued a further. That means that is not the shares at the beginning. That is not the shares at the beginning. No. A further means it's coming here now. We issued a further 2 million here. Okay. These are a further 2 million shares issued at R2.75, like that. So that should give us how much we then received. So I would say my 2 million here. I'll say my 2 million here. That is 2 million. 6 zeros? Yes, indeed. Multiply that by 2.75. 2.75, Mr. Simbi? Yes, that's 2.75 now. That will give me my 5.5 million. So I'll come here, and then I get my 5.5 million. I bring it here. 5.5 million, like that. Can I go on? Then, an interim dividend is paid. So that means my interim dividend is being given to the shares at the beginning plus the further 2 million. You get that one now. So we need to know how many shares there were at the beginning, because we are giving the interim dividends to the shares that we had at the beginning plus the further 2 million. Can I go on? Okay. So we then come here and it says, on 30 November 2021, 500,000 shares were repurchased. So that means once I hear the word repurchased, I come here, then I put my bracket, and then I say 500,000. And I know these were repurchased at, and I put another bracket over here. Then I'm told, from a disgruntled shareholder at 25 cents above the average price. The triangle then comes to the picture. I know the top part is the cash flow amount, the repurchase price, what we paid in full. And this is the ordinary share, the average price. This is the average price, and this is the above, which goes to the retained income. So we are told it's 25 cents above. 25 cents above. 25 cents above. 25 cents above. That goes to the retained income. So do I bring the 25 cents here? No. What do I bring now? I don't know. But I know, remember I've told you that you look at the beginning, you look at the addition, you look at the repurchase, and then that becomes the balance at the end. So whenever you are in such a situation, you look at the B closest to the R. You look at the B closest to the R. So if I look at the B closest to the R, that's my 26,250,000. I divide that by 7.5 million. Okay, so I'm coming here and I'm saying 26,250,000, Mr. Simbi. Then you divide that by 7.5 million, and that is going to give you an average price of 3.50 Rand. So my average price here is 3.50 Rand. I was able to get the average price because I know that if I look at the B closest to my repurchase, that can give me my average price. And my average price here is 3.50 Rand. Okay, so I can now say my repurchase price, average price is 3.50 Rand. So let's get a calculator. So I'm now going to say my 500,000 shares. There you are. Multiply that by 3.5. Cool. Then I get my 1,750,000. So I'm coming here. That's 1,750,000. I think now I can get the amounts at the top. Let's start with the Rand value here. That one there. Okay. So I'm going to say my 26,250,000. That's correct. Then I'm going to go up. I do opposite. So instead of saying minus 1,750,000, I'm going to say plus 1,750,000 plus 1,750,000. Then I'm going to say minus the 5.5 million then. Minus the 5.5,500,000. And that is going to give me 22,500,000. So it gives me 22,500,000 there. Let me get the number of shares at the beginning now. So I'm going to come here and say 7.5 million. So it's my 7.5 million at the end. Is that 5 zeros? That is indeed 5 zeros. 7.5 million. I'm going up. So if I go up, I add my 500,000 like that. And then what do I do with the 2 million? I subtract it. So I subtract my 2 million. Okay, 6 zeros I see. Yes, correct, Mr. Simbi. So I get my 6 million. So I come back up here. That's 6 million here. Okay, so it can allow me then to calculate my interim dividend. So how do I get my interim dividend? I'm told it was paid on 15 October. So at the beginning, I had 6 million. 6 million was at the beginning, that is at the 1st of March 2021. And then I issued a further 2 million. 2 million was issued on the 1st of May 2021. Then after that, on 15 October now, I then paid an interim dividend. How many shares was I having at that time? That means I'm going to add this to give me 8 million. I had 8 million shares. So I'm going to come here and say I had 8 million shares that I gave my interim dividend of 22 cents. Then I'm going to say multiply by 22 cents. Okay. Then I'm going to come and say now, calculator, it is 8 million that we need. Here is my 8 million. Is that 6 zeros? I think so. Yes. 8 million multiply by 22 cents. That's going to give me 1,760,000. 1,760,000. Now, if I want to know the dividends that I paid this year, I will consider this simple fact that last year's final dividends were not paid last year. Last year's final dividends were declared last year, but we pay them this year. So if I'm to get my dividends paid, it is very simple. I can simply say last year's final dividends plus this year's interim dividends. So my last year's final dividends, that's my shareholders for dividends, which is my 212,000. Then I'm going to add my interim dividend for this year, which is my 1,760,000, like that. And then we close the bracket. Let's close the bracket and let's see what you're going to have now. So I have my 1,760,000 plus 212,000. That is going to give me 1,972,000. That is my dividends paid. This one is simple. You just have to know your information. So your information that has to do with shares is related to your dividends. You have to bring this together because we give dividends to the number of shares. So you can't keep the shares there and say, I'm going to do dividends here separately. No. These things come together. As you've seen, I have taken my information from note number 7 and I brought it in together when I'm calculating my interim dividends. So you need to know how many shares you are having when you are paying your interim dividends. Very, very important. Even when you do your final dividends, it will be the same thing. Okay, can I go on? Okay, thank you. Let's go on. Then the next part, therefore, is my taxation paid. Taxation paid, and we're coming here. So what I did here now, I am going to open a simple taxation account, or we can call it a tax account. It will be the same, taxation or my tax account. So I'm going to say, in the next lessons, I'm going to do notes, okay? So in the next lessons, I won't do T accounts. But by now you've seen, Mr. Simbi does love T accounts. But in the next lesson, I'll do certain notes, okay? Amount at the beginning, amount from the income statement, amount, and then I will also incorporate those ones in my next lessons. Okay, so I'm going to come here. I know my sides of my ledger account. This must be my debit. Is that true? And this is my credit. Okay, so let's hear now. In 2021, the balance was a credit. So come here, then I'll say balance. Balance what? Brought down. 2021, 160,000. That is my balance brought down. And then I'll bring my balance brought down again in 2022. It's a debit. So it means under the lines here now. So I'm going to come here and I'm going to say my balance brought down 30,000. Okay, remember, you can see here are my lines here. Here are my lines, the double lines to close off the ledger account. Okay, that means on top here it's going to be balance what here? Carried down. The same amount. How much is that? 30,000. Your income tax amount is cast in stone on this side. Immovable. It will always be on the credit side. What can move are the balances. Yes, the balances can move. But your income tax is cast in stone on your credit side. Okay, we're gonna go back. Okay, let's see if we can go back to where we were. Okay, I think there we are. So I'm gonna come here and I'm gonna say my income tax. How much is the income tax? 2,072,000. There it is, 2,072,000. So once I get my income tax of my 2,072,000, then I can close off this ledger account. So I'm just gonna add this side, and what I'm looking for is the bank, what was paid. So I'm gonna come here and I'm gonna now say it is my 160,000. I'm gonna add my 2,072,000 like that, and then I'm gonna add my 30,000. That's gonna give me my 2,262,000. 2,262,000 there. So I'm gonna come, it's my 2,262,000 there, and then my bank becomes 2,262,000 there. So I'm gonna come here and I'm gonna say my taxation paid. I know in bracket already, which is my 2,262,000. I encourage you to show calculations. And if you're to show calculations, you're simply saying your 160,000, which is this one, plus your 2,072,000, which is this one, plus your 30,000, which is this one. And then it gives you that amount there. And we are done. And once we are there, then we are adding all these amounts and we come back up here to 2,561,470. I'm going to continue from here now. And then we're going to the next part, which is our investing activities. Remember, operating and then investing. So what I did here also, I also brought a fixed asset account. And this is at carrying value. In the next lesson, I'll do the note. So once I hear the word asset, that means on the debit side, it is a plus, but on the credit side, it is a minus. So I'm going to come here in 2021 and I'm going to say balance brought down, and it is 13,590,000, which I'm going to bring now on the debit side again, balance brought down, which is your 20,158,970, which I will bring at the top here to become my balance, carry down 20,158,970. And then I'm told fixed assets were purchased during the year. That means I have my bank here. I don't know. They never gave me the figure. But they said old equipment was sold at carrying value. That means here I have my disposal. Okay? Because old equipment was sold and it's at carrying value. So I'm going to bring my 67,590. And then it's easy now. I can bring my depreciation because it is at carrying value here. So I'm going to bring my depreciation, which is my 320,000. Then let's add everything here so we can come to that figure. So I'll say 67,590. And then I'm going to add 67,590. I'm going to add 320,000. And I'm going to add 20,158,970. 20,158,970. And then that's going to give me 20,546,560. 20,546,560. That is 20,546,560. All right. And then I subtract that 13 million. Then I subtract 13 million at the beginning minus 13,590,000. 13,590,000. And that is going to give me 6,956,560. 6,956,560. So I'll come here, then I'll say my fixed assets purchased, that is my bank, that is my 6,956,560. I know that must be in brackets already. And then I also have my proceeds from sale. Did I dispose any asset? Yes. I'm going to bring that, which is my 67,590. I have disposed an asset. There it is. And then lastly, I come to my financial asset. Remember, this is my fixed deposit. So I'm asking myself, did my fixed deposit increase or decrease? If it decreased, that means it is matured. So my change in fixed deposit, it is 1 million. That is my cash inflow. So I can close this bracket now. Let's see how much it's going to give me. I have a negative 6,956,560. A negative 6,956,560. Then I add 67,590. And I also add 1 million. I also add 1 million. That is going to give me a negative 5,888,970. A negative 5,888,970. Like that. And that is how I would complete this part of the cash flow statement. Cash effects from investing activities. Let's go on to the next part, which is now my cash effects from financing activities. So it is easy because remember we did this part already together. So proceeds from shares issued. Did I issue shares? Yes, a further 2 million. So I'm coming here and I'm saying a further 2 million shares were issued at 2 Rand 75. So I'm going to say 2 million times 2 Rand 75. You remember it gave us 5.5 million. That is cash inflow because we have issued shares. Then when we come back to the repurchase of shares, we're now saying how many shares were repurchased? 500,000. So I'm coming here to say 500,000. So you can see that this financing activities, it works a lot from your note number 7. And already I brought in my triangle to say, what amount am I going to use? Am I going to use the 25 cents? Remember, the cash flow statement is at the top there. My average price is here, which is note number 7, 3 Rand 50. And then on the retained income, that is where I bring my above, which is 25 cents. So if I need to get the cash flow statement amount, I'm going to say the 25 cents plus the 3 Rand 50 gives me the cash flow amount, which is my 3 Rand 75. So I'm going to come here, it's going to be 500,000 multiplied by 3.75. I close my bracket. Then I come here, it is 500,000 multiplied by 3.75. And that is going to give me 1 million. Remember, it's in bracket. 1,875,000. That is the repurchase of shares. That is the 500,000 shares multiplied now by the total, the average, and the retained income amount. That is what goes to the cash flow statement. And then lastly, we look at the change in our loan. Did the loan increase or the loan decrease? You can look at it from what I told you earlier on, that this is a liability. And with liabilities, you say current minus previous, and you follow what your calculator gives you. So you look at the loan. The loan was 2 million, but it's now 1,960,000. That means we paid back the loan. Once we paid, I have my brackets in already, an outflow. So I'm going to come here, and if I'm going to do the calculator version, I'm going to say my current, which is 1,960,000, minus my previous 2,080,000. And then that is going to give me 1,960,000 minus 2,080,000. And that is going to give me 120,000. 120,000 like that. It gives me 120,000. Okay, so let's come now where we have the entire thing. So I'll then close this part. Remember, that's a positive 5.5, a negative 1,875,000, a negative 120,000, which gives us the total amount. And then we come to the complete cash flow statement. And what we want to get is the net change in cash and cash equivalents. And to get that, let's see if we can do that together. So I'm going to take the cash effects from my operating activities, which is my 2,561,470. 2,561,470. Then I'm going to go and subtract my 5,888,970. And then I'm going to add my 3,505,000. Like that. 3,505,000. And that is going to give me my net change, which is 177,500. So I come here, it becomes 177,500. That is my net change in cash and cash equivalents. 177,500. And then when I come here now, I have my net change, which is 177,500. Then I'll say cash and cash equivalents, opening balance. I'm looking at 2021. What is my cash and cash equivalents at the beginning? You see that in 2021, I have a bank overdraft, which is a liability. That is a minus. So I'm coming here to say minus 147,500. And I have my cash and cash equivalents, which is a positive, plus 72,000. Then I close my bracket. So I'm coming here and I'm going to say, if I say minus 147, it's the same way, put it nicely, a negative 147,500, a negative 147,500, like that, plus 72,000. Correct now. That's going to give me a negative 75.5. So I come here, it's a negative 75.5. It's very key, very important that you show this calculation here, as it will affect the final amount that you have here. And then you will now say, if I take this one and I subtract that one, how much do I have? So I'll come here and I'll say my 177,500. If I come in and subtract 75,500, I'll end up with 102,000. So I'll come in, then I'll say I have 102,000. Where else do you see this 102,000? Where can you see this 102,000? You can see it over here. That means our cash flow statement has balanced. It means whatever we have calculated from the top, and when we go to the bottom, we get the same 102,000. Our cash flow statement has balanced. It is indeed correct. The examiner at times does not ask you to see that it will balance, but at times they'll ask you certain sections, but at times they'll ask you the entire thing, and it must agree the same way our question here has agreed. Whereby when you do your net change in cash and cash equivalents, add the cash and cash equivalents at the beginning, it must give you the cash and cash equivalents closing balance that is at the end. It must agree. Once it is agreed, that means it has balance. My good friends, we have come to the end of today's class. Here is the final version of the beautiful work that we've done together in today's class. And here is what to look forward to in the next class. Our next class is going to be on the 11th of April. It's exactly at 2 p.m. I'll be here, and I'm going to be doing the cash flow statement together with analysis and interpretation of financial statements. Indeed, we need to keep moving with the syllabus because the exam is around the corner. June exam is just around the corner. We need to keep pushing because we are about to sit for the exam. It is always a joy and a pleasure to have you in my class, and I hope to see you again on our next appointment date in April. Tell a friend to tell a friend that Mr. Simba will be doing cash flow statement and then analysis and interpretation of financial statements. I hope to see you in my next class. Until then, next time, cheers and goodbye.